What about the criticism that, the programs that you've designed, the 9 of them, and the action you've taken has really helped Wall Street much more than Main Street? I mean, the Fed is familiar with these. We saw it back in 08, 09. Yeah. But the fact that the market has soared while unemployment claims are also soaring, the fact that the credit markets have cleared up and companies like Carnival can now borrow, and yet people are still getting furloughed left and right, losing their jobs. How do you respond to that? Well, I think, Sarah, the economy is going through, and as Chair Powell said the other day, this is really a heartbreaking development we're seeing with in particular in the labor market. So we're certainly aware and attuned to that. What I would say about Main Street, obviously, is supporting the economy and these new facilities, providing these programs, including the Main Street lending facility that will be launching fairly soon, and the other facilities, for example, in Taft, in which case we're going to be supporting consumer credit. Obviously, in our programs, we're buying a lot of mortgage-backed securities, and a lot of folks own homes. And so I think the broader picture is that we are providing support to Main Street, but we don't want to minimize the difficult challenge the economy faces near term. But we are providing what we think of as the appropriate support that we can now, and we're going to continue to be forceful, proactive, and aggressive until we're confident that the economy is on the road to recovery, especially for Main Street. So you're clearly providing a lot of liquidity to a lot of different companies. What about, there are always winners and losers, right? You can't lend to insolvent companies. You can't take that much risk, junk-rated companies before this crisis. What kind of bankruptcy picture do you think is going to emerge out of this crisis in this country? Well, I think it's just too soon to tell. I think that's going to depend upon a number of factors here. In economic downturns, there are those events. We're in a recession, and so some of that is going to be inevitable. I think our focus as policymakers is to make sure the economy recovery, when it begins, is as robust as possible. But we can't minimize that we are in a recession here, and of course it is a global recession as well, and that's an additional factor. How permanently scarred do you think the U.S. economy is going to be as a result of this pandemic? Well, Sarah, I think the honest answer is I hope it's not scarred. I think that, there is that risk depending on the duration of this recession and the depth of this recession, and depending upon the contours of the recovery. I'm certainly hopeful, and certainly the Fed is doing everything that we can to minimize the amount, if any, of scarring. But again, as we've emphasized, given the nature of this shock, it's also going to be essential that fiscal policy also continue to provide support through the economy as well. And in particular, that can help to sustain the productive capacity of the economy through this period.